Greetings, members, one and all of the Salivation Nation, with some breaking news. The Federal Reserve is going to be holding an emergency closed meeting today. Will they raise rates? Let's explore. That sounds pretty alarming, but we must kind of take a step back when we see headlines like this. I was first alerted to this on Sunday night by Heart of Texas, a YouTuber here, made me aware of it. I was shocked to hear. I wanted to do a little bit of digging about this, and mentioned this article was on Gateway Pundit. And, I like to look at things kind of a little bit closer than kind of what the headline is saying here. It says, the Fed announces closed meeting to be held Monday morning under expedited procedures. Now that makes me think that, oh man, there's an emergency. Inflation is getting out of control. They are going to be raising the rates. In fact, there's already several YouTube videos out there basically making that kind of assumption here. I don't want to necessarily draw that conclusion right away. I want to do a little bit more digging. Let's take a look at this here. The Fed announced over the weekend that it has scheduled a closed meeting for Monday morning. The Gateway Pundit reported this on Thursday. They have scheduled a meeting for tomorrow morning. Now, this is being recorded Sunday night, and by the time you hear it, it'll be Monday morning at 11:30 a.m. So there it is, closed board meeting. It's right on their website. It's right there. In fact, this is some meetings that they have. And we'll look at that here momentarily. But on Friday morning, the Gateway Pundit reported that the Fed was going to increase rates on either Friday or Monday. The rates stayed the same on Friday, so tomorrow's meeting might be scheduled so the Fed can increase rates. Inflation is out of control, and the Fed now feels pressure that it has to do something. If the Fed does increase rates, this will be only the second time they did so this century under a Democrat president. The only other time the Fed increased rates under Democrat since 2000 was in 2016, after keeping rates at 0% under the first 7 years of Obama's term in office. The Fed increased rates massively under both President Bush and President Trump. But of course, the Fed is non-biased. It's actually a pretty good point. But tomorrow may be a big day for the markets. We will see. Now, so that is the thing. Now, if we look over here on law.com and do a little research here, this is an article from February the 11th. And there's no talk here about any kind of rate hikes or anything like that. Federal Reserve officials are in no rush to raise interest rates before their scheduled policy meeting next month, nor as a half percentage point move in March yet likely, despite a bigger than expected jump in consumer prices and stoked speculation about such options. An emergency increase risks signaling panic and cementing criticism that the central bank is too far behind in reining in inflation. While Chair Jerome Powell only last month predicted the pace of price increases would cool later this year, Powell also has shown a preference for building consensus within the policy setting committee. And no Fed officials are now signaling a race to act before its March 15th and 16th gathering. In fact, I believe this as well, and I'll tell you why in a moment. A rate increase before March would also involve bringing forward the conclusion of the Fed's asset purchase program, enhancing the potential shock to the unprepared public. The Fed instead favors taking in further data before it makes a decision next month. Speculation about a rare intermeeting Fed move rose in the markets Thursday after consumer inflation accelerated to a fresh 40-year high of 7.5% in January, with the annual core rate excluding food and energy running at 6%, also the fastest since 1982. Money markets suggest even odds on a possibility of a 50 basis point increase in March. And St. Louis Fed President James Bullard, who votes on rates this year, said in an interview Thursday that he favors 3 rate hikes by July, with one of them being a half-point move. Moreover, centrists among the top Fed officials appear skeptical of a half-point hike and are suggesting there's little need to start a hiking cycle with an aggressive move. San Francisco Fed President Mary Daly said Thursday that a half-point rate hike is not my preference. Speaking to Market News, she cited lingering drag on the pandemic and the fact that the Fed is already sending a clear message on its readiness to act. Markets have already priced in the withdrawal of accommodation, and that is them hearing what the Fed is clearly communicating. Thomas Barkin, president of the Richmond Fed, had a similar view. I'm open to it conceptually, he said, of a half-point move, speaking Thursday to a virtual event hosted by Stanford Institute of Economic Policy Research. Do I think there's a screaming need to do it right now? I'd have to be convinced of that. Powell is aiming for a rare soft landing, predicting that goods price inflation will ease as supply blockages unclog. He and his colleagues will need to face down twin risks, averting a self-inflicted recession by hiking too fast, while moving quickly enough to keep public expectations about future prices in check. So far, this article is inclining that they're not likely to do anything soon, and this is reported here on Friday as well. The January data offered some evidence of a broadening price pressures with an acceleration in costs for services unrelated to supply chain issues. However, a month of data isn't likely to push officials to an interim meeting hike. So probably not going to happen. Now, I'll give you some further evidence of that here in a moment. Fed officials appear confident that they have the tools to lower inflation and that markets fully understand their intent to start tightening monetary conditions. When the rate-setting Federal Open Market Committee next meets, officials will have a full month more of data to look at before they make a decision, while geopolitical risk in Europe have also raised uncertainty. Investors have boosted bets on the pace of rate hikes since Fed's January meeting, shifting towards 7 moves this year versus 3 that officials forecast in December. Goldman Sachs Group economists said late Thursday that they now expect the central bank to hike 7 times this year. Those of Citigroup, Deutsche Bank, and HSBC holdings now see a half-point shift in March, joining Humora Holdings in that call. In fact, I think that is about 85% probability now, up from 72%. Fed officials aren't pushing back against market expectations and are instead revising their own outlook for rates higher since their last forecast in December. So there you go. And so Ballard is pretty much the only one saying that a half-point move in March is a sensible response to a surprise inflationary shock that we got during the 2021, we did not expect. But he would defer it to Powell. Ballard said the Fed isn't in that mode of emergency rate hikes, noting that there is little need to surprise markets now given the tightening that they are pricing in already. So there it is. So here's the Federal Reserve, and here is its meeting that was referenced here. It is a government in the sunshine meeting notice. Advance notice of a meeting under expedited procedures. Sounds like it's something that is expedited. It's important. It's got to happen soon. What is going to be considered in this meeting at 11:30 a.m. on Monday, February 14th? That's Valentine's Day for those of you in Rio Linda. Review and determine the Board of Governors of the advance and discount rates to be charged by the Federal Reserve banks. So review and determination by the Board of Governors of the advance and discount rates to be charged by the Federal Reserve. That's kind of a very, cryptic language to me. It really doesn't tell us a whole lot. Final announcement of matters considered under expedited procedures will be available by the Board's Freedom of Information and Public Affairs Office and the Board's website following the closed meeting. That is, unless they raise rates. So in other words, one could interpret this, which was announced the day before the Law.com article was written on Thursday, that Gateway Pundit reported on expeditiously on Thursday, that this is going to be a rate hike. But that doesn't necessarily mean it's going to lead to a rate hike. And it doesn't mean that it's anything that's necessarily out of the normal. Because if you look at the Federal Reserve's website, the board meetings, you can see there's a whole lot of closed sessions that have occurred through a whole lot of years. Let's see here. Look at all these closed sessions here. And all of them have details. We just picked out a few of the recent ones here. So there's February 14th, we can see under expedited procedures, review and determination by the Board of Governors of the advance and discount rates to be charged by the Federal Reserve banks. Boom, let's go back to January 18th of this year. A notice of meeting under expedited procedures. Review and determination by the Board of Governors in advance of discount rates to be charged by the Federal Reserve banks. Now, I don't know about you, but I know about me, and I know about my interpretation of this. They did not raise rates on this closed meeting on January 18th, 2022, but it was an expedited procedure, a special sunshine meeting notice, and they did not raise rates then. Now, we go back to December 6th of last year, there was a notice of a meeting under expedited procedures. What was the matter to be considered? Review and determination by the Board of Governors of the advance and discount rates to be charged by the Federal Reserve banks. Boom! So another meeting that they did not raise rates under emergency circumstances. Let's go back a little further to November the 15th, 2021. Notice of meeting under expedited procedures. Review and determination by the Board of Governors of the advance and discount rates to be charged by the Federal Reserve banks. Boom, shalaka. And if that didn't convince you, they're probably not going to raise rates tomorrow because they didn't do it at their last special emergency meetings under expedited procedures. Let's look at this from November 2 and 3rd of 2021. Notice of meeting under expedited procedures. Discussion of monetary policy issues. So I think it's the language here, and they're interpreting that language. The people at Gateway Pundit should know better than this. To fear to have people thinking, oh, this is going to be something, and now people are making videos about it because they don't understand what it's about. I didn't understand what it's about until I did 5 minutes of research to see exactly what this is about. So in other words, folks, the Federal Reserve is not going to raise rates today. Mark my words, at 11:30 a.m. This video is going to be posted before 11:30 a.m. It's being recorded the night before. We got to calm down. We got to be cool and collective here, but we can't make a mountain out of a molehill in thinking, especially in these matters with what's going on here. Be very careful about sources of news and where you get them from, even if they have confirmation bias to them. Question everything. And again, this is not a slam on anybody who, because I was like, whoa, this is crazy. So I thank Heart of Texas for sharing this with me, but it's a teachable moment, folks. And now again, watch, I could be wrong. They may actually do it. This is why these meetings are closed. But if we base it off of past precedents of these last few meetings here, more than likely, it's not going to happen. 9 times out of 10, it's not going to happen. In fact, let's just, for the case of, let's do a couple of others here and see what some of these things here, and see if we can get some of these meetings from way back when. See, there's some of these other closed meetings that they talk about here. Expedited procedures. So nothing there. Let's see if we can. We're just now giving randomly selecting one here. Yeah, here we go. From March 11th, 2019. It's a notice of meeting under expedited procedures, review and determination by the Board of Governors on the advance and discount rates to be charged by the Federal Reserve banks. So every single time they've had these kind of meetings under expedited procedures where they have this as a matter to be considered, it's a very generic thing. And we don't really know exactly what falls under this, but it certainly is not related to rate hikes. At least it hasn't been in the past. So there you have it. I hope you found this video insightful and useful and give you a little bit of perspective. I'd like to extend a multitude of gratitude to Heart of Texas for sharing this with me, and for all of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.